China has the world's second largest economy, but even then, it's only a little more than half of the United States GDP. According to CNN Money, the figures for 2015 put the Chinese economy at 11.2 trillion US dollars, way ahead of number 3 Japan, who comes in at just 4.2 trillion US dollars. But things haven't been going all that well for Beijing. Its markets took a dive, then China elected to devalue its currency. The dip in key Chinese indices were felt across Asia, as well as the yuan's dip. But what does it all mean? Returning to the podcast is Curtis S. Chin, Asia Fellow with the Milken Institute, to help unpack everything.
When we look at China today, from the stock markets to what the Chinese government has recently done with its currency, clearly the message is China is still struggling how to make that transition to free markets, to a more open system. So we look back at what's happened in China these last couple of weeks. Clearly the headlines of, let's say, a month ago were really record drops in the Hong Kong or in the Chinese stock market, specifically in Shanghai and Shenzhen. One response was that the Chinese government intervened. But let's take a step back. Why did the markets drop? A whole lot of speculation out there. But I think fundamentally we're looking at an issue of where regular mom and pop Chinese investors began to have questions about the sustainability of China's growth story. And you can understand that when you look at the numbers coming out of China today. Even more recently, we saw the Chinese government devalue its currency, which followed not so great trade figures from China. So whether it's the Chinese stock market declining by significant amounts, or the Chinese government's interventions into its own kind of currency and the exchange rate, I think what we're looking at now is doubts about the sustainability of the Chinese growth model. Unfortunately, I think what China has done is in a way undercut a longer-term confidence in the China market. A couple of years ago, 3 years ago, let's say, when Xi Jinping took power, there was a lot of conversations about putting greater kind of trust in the power of markets, that through markets, through market forces, China would move forward. Unfortunately, in this last month, we've seen perhaps, a little doubt come into the minds of the Chinese leadership about that. Interventions in the stock market, the devaluation of the Chinese renminbi, the Chinese yuan, all examples of perhaps a government that's a little bit less confident in the power of market forces alone to move China forward. I think that's unfortunate. In the long term, what China needs is less interventionism and more reforms and more trust in the ability of the own Chinese people, of the Chinese market, to allocate resources, to allocate investment dollars, and provide opportunity for Chinese companies to create jobs and growth for the overall country.
Well, let's talk about that intervention. I mean, they significantly played with the stock market to try and get it to stop sliding. I mean, was that a good idea, or did in fact they make things worse in the long run, like you mentioned a moment ago?
Yes, the Chinese government clearly intervened in an unprecedented way in its own markets, specifically the Shanghai and Shenzhen markets. What does that mean? It means that they stopped people even from selling shares. Think about that. If you're an investor, I'm investing in the Chinese market, in a Chinese company, with the hopes that, of course, it's going to grow. But if I think that maybe I want to put my money elsewhere in any normal situation, well, then I would sell that share and maybe invest in another. But now you're prevented from selling your shares. So if you think about the future, why would you ever want to invest again? If there's a difficult situation, you're trying to understand what's going on, you decided, I'm going to shift my money elsewhere. The Chinese government might, as they have done recently, say, well, no, you're not going to do that because we don't want the stock market to go down. Other interventions have been including stop or investigating what they think is, in their words, kind of malicious activities. And clearly people need to obey the law when they're investing or taking part in any market. But the Chinese government, I felt, has overreacted. But when you think about why, it perhaps isn't simply because they're worried about mom and pop people losing their money, which is a terrible thing. What they're probably most worried about is how do we ensure stability for China in the long run. So if too many people are worried about and have not a lot of confidence in what the Chinese government is doing, that's not a good thing. And so let's look at more examples of this. More recently, the Chinese intervention into their currency markets, devaluing the currencies. And so what that means is that, say, if you're a Chinese citizen, goods and services from overseas are now going to cost more money. because your renminbi, your Chinese currency, is worth less than what it was before. Certainly that might be good for people who want to buy products from China. That might be good if you're a Chinese citizen and you're spending money only in China on Chinese products and services. But that's not how the world works today. And then even more, I would say more sadly, but certainly more strikingly, let's look what happened in Tianjin. Tianjin, a terrible explosion took place, killing so many people there. Investigations continue into what happened in Tianjin, but now what we're seeing is that the Chinese government is thinking through, what can the media say about it? Because again, what they're probably most worried about, as with the Chinese stock market, as with issues related to Chinese currency and what's happening to Chinese companies, what they're worried about is the long-term stability of their country, and that's understandable. But if people all of a sudden are complaining about how come I'm not getting information on what happened in Tianjin, if people are complaining about how come my investment in the Chinese stock markets has gone down, if people are complaining about how come I can't be exporting more products, the value of the renminbi seems to be higher than we'd want it to be. Clearly, China is responding. But all of this, when we look at it together, I think says to people who look at China, that perhaps China is a little bit less confident in what is going on in China than the numbers might otherwise say. And that brings us actually to a very important point. When we look at China, do we really believe the economic coming out of that country? I think we got to look at all kinds of numbers to get a sense of it. So it's not simply the GDP figure that China might announce. We have to look at things like how much electricity is being used, all those other indicators that might give a better sense of how good the Chinese economy is doing today.
Well, I wanted to ask you about that because what happens in the market, what happens with a currency doesn't necessarily mean the exact same thing is happening to the economy. So is there something truly to be concerned about with the Chinese economic status as we see it today?
Indeed, I think there is. When China slows, really Asia slows also. China is such an important part of the Asia-Pacific marketplace.
Well, you're absolutely right. I mean, because as we saw the Chinese markets drop, as we saw the Yuan drop, that cascaded all over Asia.
Absolutely, absolutely. And so, your question was really about, what is the progress, what is the prognosis for the Chinese market? Again, I think the Chinese government is struggling to maintain a growth figure, which maybe is down to lower than 7%. But you raise an important point, the difference between, say, the Chinese stock market and the daily life of an average person. I think the same with the United States with the global financial crisis. There's always that question, is what is happening on Wall Street of relevance to Main Street? And I think that's an important question when we also look at China today, is what is happening in the Chinese Shanghai and Shenzhen stock markets important to what is happening in the Chinese version of Main Street? And I would say not directly in the sense that really there aren't that many people when you look at the 1.2 billion, 1.3 billion people in China who are actually invested in those stock markets. But indirectly, it's very important because it goes to what is the confidence people have as to what is going on in China today. And so that goes back also to perhaps one reason the Chinese government is fast and furiously really trying to control what their own citizens understand and what they hear about what is going on in their own economy. And, outsiders were even more removed. There are actually a lot of protests going on in China that maybe don't make our newscast here in, I'm living in Thailand right now, in Singapore, where I work, or back in the United States. We don't really see what's going on day to day, what's going on in China. And the reality might be that the average Chinese actually doesn't see day to day what's going on in that vast country, in that vast economy that is China today.
All right, one last question. China's trying to get the AIIB off the ground. It's heavily invested and involved with the BRICS Bank. Is the devaluation of the yuan or the sliding stock market going to affect either of those two entities?
I'd say no. When we think about China, when we think about things like the Asian Infrastructure Investment Bank, when we think about this new development bank put together by the BRICS countries, Brazil, Russia, India, China, and South Africa, these are long-term plays. And I think, to their great credit, these initiatives, these institutions aren't about daily fluctuations on the stock market. It isn't about a daily exchange rate or the interventions into an exchange rate. What these institutions are about is kind of a sign that the global financial infrastructure is changing. And that reflects the reality of economies today. I saw one statistic recently that had the developed economies, I think lower, it might have been 42%, but was certainly lower than 50% of the global GDP. And I think that's a reflection of the reality today, which is a good thing, that the world is growing. My hope is that we look at these statistics of GDP from the developing world, the emerging world versus the developed economies. One day it'll all be one global developed economy, and that's far from the situation today. So when we look at individual countries that are growing, like a China, let's keep in mind China is still growing. It's just not at that growth rate that had one time dominated all the headlines. That as China continues to grow, understandably the Chinese government will say, well, shouldn't that be reflected in global financial institutions, in their shareholding, in their leadership? And so things like the Asian Infrastructure Investment Bank, the New Development Bank, I think these are efforts that are understandable, that some of the countries behind them are pushing them to reflect the changing global economy. That's a good thing. But I would say as these institutions emerge, let's hope it's not a race to the bottom when it comes to global standards, when it comes to safeguards for indigenous peoples, for people that are impacted by the projects of these institutions. That as these institutions emerge and as they develop, let's hope they come together, elevating everything around the world to better protections of our environment, to better protections of people impacted by the project. That will be for a good thing. When the AIB was announced, there was a lot of skepticism as to whether it would actually happen. But look how fast it's happened. I think that's a terrific thing. But now the devil, as they say, is always in the details. What will this AIIB actually do? How will it always operate, or how will it operate as it goes forward? And I think it's appropriate for the world to be watchful of that. But hopefully, let's hope the world engages and makes that institution a much stronger bank than it would otherwise have been had it just simply been a Chinese bank. So I'm hopeful.
All right. Thank you so much. Curtis Chin with the Milken Institute, thank you again for your time this week.
Always great to be with you.
Have you felt the pinch of the devalued yuan? I know I have. Here in South Korea, the won has decreased in value against the US dollar and made my overseas purchases significantly more expensive. But I would love to hear from you. Do you have any stories to share? If you do, be sure to drop them in the comments on Facebook or Twitter.